structure, key entry point, and second entry. These three things combined create a high probability setup. These three things you need to keep in your mind while you're trading. Okay, and today started looking like a trading range, but we started with the unusual trading range, and it's unusual because the trends within the trading range are really big. If I take a ruler and I measure the start of the trading range and I measure the top of the trend, excuse me, it is 60-point move trend. And under normal circumstances, this would be extremely strong uptrend that we would not be counter trending. And it's the same thing we have to do here. This is what I was looking today, because this uptrend was fairly strong. So even though we have a trading range, there is an upward bias in this trading range. And the first trend line was something like this. And then I was even eyeballing a trend line that is a little bit wider, something like this, because it fits nicely off the top. And we are working in this uptrend right now. How do we find a high probability setup? Well, it is a second entry long or failed second entry short, and key entry point is the key here. So as this downtrend worked out with the break and a new extreme, and you push back above the EMA, indicating strong bullish momentum, market created a failed first entry short, but this is just a failure, so we do not take this, and there is a failed second entry short. I will mark this as an aggressive entry because you're not quite close to the EMA. Take a look how there's a gap between the EMA. Okay, so even though you have a structure and you have a second entry, you don't have a key entry point here. So you have to be a little bit patient, but if you want to pull the trigger, it is fairly reliable. Here is the new high, first entry long, pullback, second entry long, triggered above this bar. This was the first trade for the day that I took, and was fairly aggressive as well. But this is now even a first entry long, second entry long. It is a continuation of a first entry short, second entry short. EMA is pointing higher. It ended up being, the trend line ended up being a little bit different. I had the trend line a little bit wrong, and the trend line ended up being something like this. And had I seen this, this would be easy, a full-on good trade. But I didn't have the trend line. It worked anyways, but the bias is bullish. And take a look. When I'm looking at this like this, we are starting to get far away from the resistance. So I still play this long-term bias, so I don't think about selling, but I'm not so sure that I want to buy because there is no more second entry left. Okay, the market keeps reversing and you keep pushing below EMA. Okay, and once you have a break of this uptrend, what you're expecting break and a new extreme, just as trendline rules says. Okay, but we keep pushing back below EMA, and this is a good confirmation that the bias may be changing. You keep pushing below EMA, you have a new high, first entry long, pullback, second entry long, failure. Okay, and now what do you do? Because this is such a strong bullish bias, and it looks like price made its way back above the resistance. You're probably thinking you may get a higher low setup and continue working higher, but at the same time, this is a failed second entry short. So this area right here is pretty unclear, and the best thing to do is here to be safe. Let the market do its thing. There's plenty of good entries. The market keeps pushing lower and keeps pushing lower. All right, and by the way, I forgot to draw the trend line. Always draw the short-term trend lines. You have a break and a new extreme, you have another break and another new extreme. A market just keeps pushing lower and keeps pushing lower. So as the market keeps pushing lower, you're probably thinking there's some sort of a bigger pattern in play because you keep making new lows, new lows, new lows. You're below EMA, but look what we have here. This bigger trend line just came into play, and this was my second trade that I took, and this was right here. Probably not here. This was the trade that I took. Yeah, this was the trade that I took. I entered above this bar because this was such a nice confirmation of this uptrend, and I was still thinking that because this uptrend was 60 points, I still was thinking that this trend line may come into play. I barely managed to get scalp, and then my trend line got broken. And once I see this, I need to switch the gears, okay? Because I cannot no longer keep making trend lines like this and making them flatter and flatter, because just as I mentioned in my trend lines video, the first trend line you would see when you would be first trading live is always the valid one. Okay, you don't want to keep making them wider and wider, because you always need to find the oldest trend line, the first that you would see when you would be trading in it live. Okay, so once my trend line got broken, I need to switch the gears. This is a clear downtrend. We're below EMA. There is a bigger pattern, spike, and a channel pattern. Okay, and take a look at the structure, key entry point, and second entry. Excuse me. This is the new low, first entry short only. Okay, we are in a downtrend, so we're looking for second entry shorts at the key entry point. We're still below EMA, we're still working low, we have a new low, first entry short, second entry short, but we are far away from key entry point. We cannot take this entry. Okay, even though it made quick easy scalp probably, or it didn't, you still don't worry about this. You're far away from key entry point, and you're finally pushing to key entry point, but you're above the EMA. So this is first not a good indication for the bears, but it ended up being a big bearish bar. But this is just a first entry. Okay, you got the structure, you got the key entry point, but it is just a first entry. So we have this short-term trend line working higher. Always draw these short-term trend lines, and I'm drawing it tighter like this. I'm not drawing it wider because the trend is down and this is just a correction. Okay, and you have a first entry short pullback, second entry short. So this is a high probability setup. The only thing here is the signal bar. The bearish bar is way too big, so this is unenterable. But had the signal bar been a little bit smaller, this is definitely a good entry. So take a look. Structure, bearish. You're coming from the other side of the trading range. So you're expecting for price to reach all the way down here. You have a key entry point, EMA, and you have a second entry. You have a two-legged pullback, and the uptrend played out with the break. Attempt to make a new extreme, but EMA held prices twice. And you created a new low. So once you have a break and a new extreme, you're expecting either straight up correction, straight up reversal, or possible correction. And look what you have here. You have a move higher and you have a big bearish bar. So this is not looking like a reversal much, does it? You have another few bullish bars and you have another bearish bar and a big move down. When I was watching this, I was thinking that this is for sure not going to be a reversal. This is probably just going to be the correction. So I drew my trading range like this, and the price, you can see, is starting to move sideways. EMA is starting to no longer point down. It's in the middle of those bars and is heading flat. And good thing that I drew this trading range, because you guys can see there's a new low, first entry short, second entry short, even though double bottom resets the count. But you can see there's a two-legged move, but you don't want to go short no more. After downtrend played out with the break, new low, you're right now going sideways. EMA is in the middle of those bars and prices are stacked up. Respect the trading range. The market just keeps chopping and you can't take any entry right here. This is just such a choppy area right here. A lot of bars going sideways, a lot of stims. This is such a slow and choppy trading range. You have to be patient. There's going to be plenty of days, and this is just 30 minutes after the market opened right here. So you can see that there's a lot of trades. So definitely be patient, and you're heading your way back into the trading range. Most breakouts of trading ranges will fail. So what I'm going to do, I'm going to draw the short-term trend line once again, because I want to see a break at a new extreme. You have a break of this uptrend, but you don't have a new extreme, which already indicates that the bulls are really weak. Okay, because the overall bias, overall structure is still probably bearish, because you're supposed to have a break new extreme. You don't, you push lower and you pushed higher once again. So this is starting to get really choppy. There's almost no good high probability setup. You have a first entry short, pull back higher, second entry short, big bearish bar. This uptrend played out with the break and a new extreme. You have a two-legged pullback that played out, and you're at the top of the trading edge. You're fading the breakout. This was my third trade for today, and I waited for this bar to tick a little bit harder to get better entry with the limit order, instantly turned down and made a quick easy scalp. So hopefully you guys understand this entry. Downtrend played out with the break and a new extreme, but you don't have a reversal, you have a correction. You're in this trading range and you want to fade the breakouts, but you're not going to be fading the breakouts to the downside because the bus is down. You're still going to be fading the breakout to the higher side. Okay, and market kept just choppying. You're expecting for market to reach this bottom side of the trading range, but it's really not happening. It's in the upper third of the trading range. It almost seems like market is going to reverse higher, but it didn't, and for whatever reason market just turned down lower. And once again, once you keep making new lows, because after this break and new extreme, you're expecting correction and possibly the reversal. I keep reminding because it's really, really important. But once you keep pushing to a new extreme, there is probably a bigger pattern in play. And as you guys can see, there's a first swing, this swing sets the trend line, this swings confirm it, and fourth confirmation of the downtrend. And if you copy it, you put it right here, it fits all the way nicely down here. So what is the structure here? Structure is now bearish. We have the key entry point marked, and we're looking for second entry shorts now with the trend, because trend is down. Okay, so I have to draw the short-term trend line because this is looking like a big spike, and market keeps pushing lower, and you have a new low, first entry short, new low, first entry short, new low, first entry short. So you cannot take none of these entries. Okay, this is a tight spike and a channel pattern. Look how far away you are from EMA. It's not worth taking a chance here if you're so far away from EMA, and this is not a second entry. A market kept pushing lower, kept pushing lower. You just have to really be patient in this area. And look what you're starting to have here. You're starting to overshoot the downside of this trend line. And overshoot a lot of times lead to a break of a trend line or even straight up reversal. This is what overshoot will do. It will a lot of times generate strong momentum because it is unnatural activity in the market. But look how strong this bias is down, and you're expecting the price to go from the other side of the trading range to the bottom. Okay, so when you see this, I would definitely be not buying because this is such a strong trend down, but I would also stop looking for shorts because trend lines are just slanted support and resistance lines, and when you're coming from the one side, you're heading to the other side. When you're coming from here, you're heading to up here. Okay, and you have a double bottom which resets the count, and you have first entry short, second entry short, but you're above the EMA. You have a break in new extreme, and you have a third entry short, which is really not an entry because, and you're above the EMA, but you suddenly push below EMA. Okay, which is confirming this bearish bias here. And you have a first entry long failure, and you have a second entry long failure below EMA in a strong bearish downtrend. And I'm going to mark this entry because a lot of traders took it, and in my opinion, this is not a bad trade to take a chance here because this is a failed second entry long, which is a trap because this is a downtrend. The trade ended up failing, and that's okay because trading is about taking a chance. Is a probability game. No strategy is perfect, but the overshoot here was the main indication why to stop thinking about shorts. Either way, if you took a short here, you didn't do nothing wrong. I think this was a good trade to take a chance here. It gave you enough time to exit the trade because look how EMA is flat in the middle of those bars. This is a congestion. If you're a beginner trader, you don't want to be exiting early, but if you're a little bit more advanced, these congestions, you can get out of these congestions. I even exited during this congestion in one of my live videos. Okay, so these congestions, a lot of times you don't want to get stuck with this, you know, for 30 minutes. You can get out of here. So once again, price action is starting to get fairly confusing here because the structure is down, is bearish, but you have an overshoot. So you have two conflicting beliefs. The bigger pattern takes precedence. So if I'm leaning more towards anything, I'm leaning more towards shorting. Okay, and you have a double top right here. You have a new high, first entry long, and you push below EMA, confirming the bearish bias, and it's starting to look like a trading range. You have a first entry long, second entry long, but you don't want to go long just yet in such a strong downtrend because you may push to the downside of this trading range. Okay, and you pushed higher, and you have a big bearish bar that just broke this trading range. Okay, this is a breakout out of the trading range, something like this, because you're going sideways. EMA is in the middle of those bars. This is a little bit of the congestions, and most breakouts of these congestions will fail, and the trend is down. Okay, so even though this is not a second entry per se, and this is not a second entry, this is a failed breakout category, and this is a high probability setup. But market kept pushing lower, and you would be thinking that we may make it to the downside, but market just rallied up higher, and there's really no entry right here because you have an overshoot, and this move up is confirming the overshoot. So you're probably expecting to get a little break, and you have a just first entry long, and market ends up breaking the trend line really strongly. And here you have a dilemma. You're either playing the uptrend, or you have a first break of this downtrend and you're waiting for a new extreme. Okay, and I was waiting for a new extreme because I followed the trend line rules. This is a clear proven downtrend. Look at the midline, how nicely it fits. I'm waiting for a new extreme to the downside. Okay, and look what is happening. You have a first entry long pullback as the market is pushing below EMA. I'm expecting a failed second entry long, but it didn't happen, and market just reversed instantly higher. And take a look at this. So you have to switch the gears. You have to switch the gears here. You cannot be looking to short the market when it's clearly indicating that there's a strong bullish momentum in the market. Look how strongly you pushed above the EMA. This is clearly an uptrend. But remember, during trading range like this, when the trends are extremely large within the trading range, you don't want to be fading the breakouts because the trend is just so big. Okay, you want to be patient. You want to play the trends more than the trading range. This is one of those few occasions where you want to play trends more than trading range, because this is just these trends are so big that you cannot ignore them. You have a new high, first entry long, second entry long, structure bullish, yes. Key entry point, EMA trend line, no. Second entry, yes. Okay, so you're far away from both key entry points. You have to stay patient here. The market keeps pushing higher, You don't want to short. You don't want to short because you're inside of this big uptrend still. You're far away from EMA though. You have a new high, a bunch of first entries. You won't have a break higher, and you just have a first entry long. And market keeps pushing higher, bunch of first entries. And look, you're breaking above the resistance, but like I said, the uptrend is too strong for you to fade the breakout. Okay, don't try to fade the breakout during day like this, when this is such a strong trading range. It's not going to happen often. There are very rare days like this when the trend is extremely strong in the trading range, but in situation like this, just be patient and play the trend. And you just have a bunch of, once again, first entry longs, which is not what you want to see. You want to take a high probability setup. Okay, and you actually have a new low right here, which I forgot. You're looking for failed second entry shorts. You have first entry short, pullback, second entry short. It's not quite touching the EMA, but I completely forgot about this trade right here, because you just now touch the EMA and you reset the count where you look for failures, and you also, the resistance now acts as a support. Your first entry short, second entry short, even though you're not touching the EMA, look how strong this trend is. It's worth to take a chance here. Okay, and you have an overshoot of the upper channel, and just like here, what overshoot will probably lead to, it will probably break the trend line on the other side or straight up reverse the market. Okay, and you have a new high, you have first entry long failure, and you're below EMA, okay, which indicates that the overshoot may be valid. And you have a second entry long failure, big bearish bar, you're back below the EMA. You're back below the EMA, confirming the bearish bias, confirming the overshoot. And this is a two failed attempts in the strong direction, which was the uptrend. But the overshoot here is once again a good indication that you may go to the other side of the trading range. You're below EMA, second entry long, failure inside of this trend. This is a high probability setup. Okay. Look what you have here. You have a little bit of dilemma because you have this uptrend. And you are back above the EMA, but you don't have a break in a new low of this downtrend. In this situation, I would be more focusing on the bigger pattern on the uptrend. So if we get a failed second entry short above the EMA, I will take it. We don't, we just get a first entry fairly bearish body bar, and your price created a new extreme of this downtrend. So this downtrend played out with the break and a new low. You have a bullish bar, but it is in the middle of nowhere. The structure is bullish. It is a second entry, new high, first entry long, second entry long, but you are not at the key entry point. So this is a fairly aggressive to take. But once market keeps pushing above the EMA like this, the uptrend is resuming. Okay, because you have the overshoot right here, and you could have reversed the market, which it didn't happen. You just broke the trend line, and the market pushing back above the EMA, indicating that the bulls are still strong. So you're looking for failed second entry short. Okay, and you have first entry short failure, pullback, second entry short failure, but you're really far away from EMA. You cannot take this trade so far away from EMA like this. And take a look what happens. This is why you always have to be close to the EMA. You have a new high, you have first entry long, pullback, second entry long. So what is the structure? Structure is bullish. Key entry point, you close kind of below the EMA, but it is a second entry. This is fairly aggressive because I don't like how you close below EMA, but it's a second entry long, two-legged pullback in bullish uptrend, and you're probably still going to make a few more pushes higher, because take a look how, once again, how strong this trend was. Trend started right here. This is 47-point move trend. Okay, during a normal day it would be a strong uptrend day, but in this trading range it's just a one push up. And market keeps pushing higher. And you have a micro double top right here. You have a micro double top. So it looks like this uptrend may have played out, and it may look like this is as close we're gonna get to a new extreme. So you have to reset the count here, and you have a new first entry long, pullback, second entry long, but you're below EMA, and market keeps pushing higher and keeps confirming the bearish bias. So once again, you're looking for failed second entry short. First entry short, pull back, a second entry short, and you're really far away from EMA, so you cannot take this. And market just keeps pushing higher, keep pushing higher. At this point, you have to completely forget about shorting, because just like we just measured, this is almost 50 point here. Now it's 60 points. We're not looking back, we're not reversing. This is such a strong uptrend. You're above the EMA. So what you're looking for, second entry longs. Okay, but you just get a bunch of first entries, so you have to be patient. You have to be patient. You have to be patient. I can even draw trend line something like this. Okay, something like this. And you have a new high, you have first entry long, pull back, second entry long. And this is a two-legged pullback, first leg, second leg. This is a second entry at the key entry point at the EMA, and the structure is bullish, a nice big bullish bar. Gorgeous high probability setup. You have to take it. Market keeps pushing higher, and you have another second entry long, new high, first entry long, second entry long. You have a tiny break, new extreme, tiny two legs. What is this? Structure, bullish. Clearly this is a healthy 45-degree angle. Key entry point, EMA, yes, and a second entry long, yes. And market just keeps pushing higher, and you know, today's volatility, wow, it is absolutely insane. So hopefully you guys understand that you need to pay more attention to these trends within this trading range, because these trends are so big that you really need to focus on them. So hopefully you guys enjoyed the video, and I'm gonna see you guys in next one. Take care, everybody.